Something that I am planning to do going forward on the first Friday of every month. Obviously, when travel things happen, things like that, it'll get mixed up. So just be on the lookout. So what we want to do is just a market update. Primary topics for today are just simply we're going to talk a little bit about what's going on with mortgage interest rates, how that impacts you guys as agents, what we're seeing in the market. Kind of move in there to just the upcoming economic calendar and what the potential market movers are going to be. A couple of other just key pieces of data that I watch that you may want to keep an eye on as well. And then we'll talk a little bit about the stuff on the housing side, on the just some inventory data and home sales, just some different things that I'm seeing in the markets and some talk tracks. Really, just try to help give you guys some bullets as you're out there meeting with your clients. I think it's really super important that in a market like this that we are the educator, and our clients see us as the place to come and get information. So without further ado, I will share my screen. And again, this is all the nerdy. You've signed up for the nerdy stuff this morning, so buckle up. We're gonna get full nerd this morning. So first thing we're looking at here, this is a mortgage-backed security chart for the last 6 months. So just in case you don't know, mortgage rates are based on an investment product called a mortgage-backed security. So what happens as the cost of the bond goes up and down, that's actually what makes rates go up and down. So as the price of the bond gets higher, rates go lower and vice versa. So a couple of things should jump out to you in this chart. Number one, just simply the volatility in it. Lots of ups and downs in this in terms of, and again, as we're going down, that means rates are going up. So here we were back in kind of into summer, early fall, mid-September. We saw a big spike in interest rates really through November, did have a temporary dip, then had that really, really big spike through the first of the year, through about mid-January. But the good news is we are actually starting to see rates move lower from here. One thing you can always look at, guys, is that if you want to look at the 10-year Treasury yield, the 10-year Treasury, you can pull a chart like this. Every business news site has a chart for the 10-year Treasury yield, and what will happen is that the rate on a 30-year fixed mortgage will generally tend to track the direction of the 10-year Treasury yield. So what that means in layman terms is that if the 10-year Treasury yield is going up, rates are going up. The 10-year Treasury yield is going down, rates are going down. So a lot of times this is actually the chart that I'll show clients as we meet with them for buyer consultation to kind of give them an update on what rates are doing. So this is the last 6 months. So again, you can see a lot of volatility in there. If we pull it back over the last 90 days or so, good news is we have seen rates move a little bit lower. Now, we did have a temporary spike earlier this week as we start to talk about economic reports, had the big non-farm payroll report or the job number that came out this morning. So I'll talk about that in just a second. So that's kind of flattened it out so far today. So we'll have to see how the markets digest that report coming up later today as the markets move forward. So the talk track as we're working through this is just very simply that the reality is we need to be talking about our clients that mortgage interest rates are volatile. They're always going up and down. But the good news is we live in dollars. We don't live in interest rates. And so generally speaking, even a 0.5% move in our market with median home prices really only makes on average about an $80-90 a month difference in monthly payments. So we want to make sure that we're communicating that. Obviously, as you get your people to us, we're emphasizing those things to them as we go over the total cost analysis and different things like that. But again, the volatility in the markets kind of is what it is at the moment. So next thing we want to take a quick look at is just simply the upcoming economic calendar. This is a website called Trading Economics. So if you wanna geek out on some of this stuff, this is the economic calendar on Trading Economics. This is the high impact economic reports that we have coming out in the month of March that will all have the potential to move the mortgage interest rate market. Big one today was obviously this non-farms payroll report. So jobs number did come out a little less than what was expected. Unemployment rate did tick up a little more than what was expected, but then buried within all of the data was wage growth. And what we saw in wage growth is that simply wages are continuing to go up. Wages going up is something that is inflationary. As you may have heard or may know, inflation is bad for bonds. And so, with that being said, the inflation component of it is definitely the piece that the markets and the Fed will be digesting as we go through the afternoon. Big event this afternoon. Fed Chair Jerome Powell will be speaking this afternoon. Obviously, there's a lot of political banter going on right now between the administration and the Fed in terms of the direction of interest rates. So it'll be interesting to see what Fed Chair Powell has to say this afternoon, because that certainly has the potential again to be another market mover. Key things to be looking at over the course of the next 90 days, or excuse me, next 30 days, are again inflation. The two main things that the Fed is looking at in terms of inflation right now is employment and is inflation. So next week, got a couple of major inflation reports that are coming up. The core inflation rate. So that's going to be your CPI, followed up by your PPI. CPI is what we as consumers pay for stuff. PPI is what manufacturers pay for raw goods to make the stuff that we're going to buy. So those are going to be pretty big market movers. And then consumer sentiment. Michigan consumer sentiment comes out next Friday. That's how the consumer's feeling about the market. We are definitely seeing a trend in the consumer getting into the end of their rope in terms of savings rates. Savings rates are back to the lows that we've seen prior to COVID. Credit card balances are back to all-time highs. So the consumer, just from a pure financial standpoint, is getting to the end of their rope. So that's going to be something that unfortunately could be detrimental to the economy going forward this year. The bad news that is good news, though, for us in real estate those are the type of things that could actually lead to lower interest rates as we come into summer in the second half of the year. So a few other key ones: retail sales. Again, that just illustrates the strength of the consumer. And then as real estate agents and real estate professionals, I think we should always be looking at all of our housing data that comes out. So we've got building permits, housing starts. That's on the new construction side. Obviously, that's not as big a deal here in central Kentucky as it is in other markets, because we don't have as much new construction as some of the other places. But as you get deeper in the market, we'll have another report on existing home sales um, and some other real estate data. So lots of stuff coming up over the course of the month. Obviously, again, this is all stuff that I'm monitoring. So if you ever have any questions about any of this stuff and how it's going to impact things, then you can always reach out to me. But if you, like I said, if you do want to get into the weeds of some of this stuff, Trading Economics is a really, really good website to look at. Couple other things to hit you guys with just real quick. Number one, if you're not monitoring, every Wednesday, the Mortgage Bankers Association of America, so MBA, releases the mortgage application data. This is the number of people that have applied for loans in the previous week. The reason why this is a big deal, this is like our number one true lead indicator of where the market's going to be 60 to 90 days from now. And what I mean by that is that we all know that 90% of consumers that we deal with aren't going to pay cash for the property that they're going to buy, which means they're going to have to apply for a mortgage. So good news is we saw this week when the report came out on Wednesday, we did see a slight increase in the purchase index, meaning the people that were actually applying for purchase loans, not refinances. So purchase applications were actually 9% higher than they were the week prior. We're certainly seeing that with our team in terms of the amount of applications that we're taking at this time. So that is certainly trickling down to here local market. So, again, always a good idea. If apps are going up, that means those are the people that are going to be buying houses in the next 60, 90 days. So definitely, if you want to look at forward-looking data on where the market's headed, then the application data is always a good one to look at. Another great resource for you guys. Probably heard me say this 100 times, but Mortgage News Daily, great website for all things mortgage and a lot of things housing. A lot of commentary around mortgage rates, but really what you're looking at here, and the reason why I encourage you guys as real estate agents to use this website is just simply the daily rate survey. So the daily rate survey, the good thing about Mortgage News Daily is they're not affiliated with any particular bank or mortgage company or things like that. They're just compiling data from a system that most mortgage companies like Benchmark uses to lock loans. So this is a national average of locked loans. So you can see as of yesterday, national average on just your regular conventional 30-year fixed rate mortgage was about 6.79 on those loans. Now, again, you have to understand the loan level price adjustment component of it, the risk-based pricing component of it. This is assuming that that borrower has a perfect credit score of 780 or higher. It assumes that that borrower is putting down at least 25%. And it's assuming that that borrower's debt to income ratio is under 30. As long as they are checking those boxes, that's about what you're going to see in terms of interest rate for most borrowers. So good place to point clients. Hey, if clients asking, hey, what are rates doing right now? Well, national average right now is 6.79. So you can kind of see that. Also has a lot of good if you're doing buyer consults, which I hope you're doing buyer consults. Mortgage News Daily is a great resource for housing data. So now again, most of this is national, but you can start with national and then build it down to local. So you will have all of your existing home sales, pending home sales, all those reports. You can change date ranges and all that stuff. Again, just making you look smart, making you look like the educator. This is all really, really good data that you can use in buyer consult, in seller consult to explain where the market is in terms of what's happening. I'll actually love this chart right now as a data point for people, meaning that existing home sales, so the amount of homes that are selling versus the amount of homes that are available on the market. So we can see that the gap is growing between inventory and sales. Sales are still pretty flat for all intensive purposes, while inventory is growing. That's a good thing for the future. And just to show you a couple of things on just some data around listing counts on the housing side. This is your active listing count for our market. This is all realtor.com data that we get from the fine folks at Keeping Current Matters. So I think one of the things that's really, really encouraging as we come into this spring market over the course of the next 60, 90 days is the fact that inventory is growing. I mean, if you look at where we were at in March of 2024 versus where we were at the end of February 25, and we got about 100, call it 150 or so more listings in 25 than we had in 24. Two key components that's really going to help us activate this market is more houses on the market for sale that we can sell to people, and number two, lower interest rates. So we're seeing a little bit lower interest rates right now, seeing more inventory on the market. So that's your active listing counts. And then when we look at days on market, again, year over year, days on market, back this time last year, March 24, average days on market was around 46. Now we're seeing average days on market up in the 70s. And so, and again, this is median. So I always like median, not average. So we're seeing homes available longer, which is another thing that we all have to means we have to brush up on our sales skills in terms of how we market listings. We've been in a market over the course of the last 3 or 4 years where marketing listings really was a non-necessity, and now all of a sudden we have to blow the dust off those marketing skills for our listed properties, and obviously we want to be doing things to help you guys do that. So some pretty, I think even though again, it depends on how y'all want to look at this in terms of this type of listing data. I think it's a positive for the markets in terms of where we're going, what we're doing, because we need more inventory. We need inventory to loosen up a little bit. So I think that's all good there. Last thing that I want to show you guys, and again, I want to try to keep these short and sweet when we do these once a month, and right at that 30, 45-minute stuff. Last thing that I wanted to share with you guys, if you didn't know, you have access to this. This is your National Association of Realtors. But again, more data if you want to show to your clients. The research and statistics section of the National Association of Realtors website is super valuable in a lot of things that they have in terms of things, graphics that you can steal and use in presentation. as you're getting out there, things that you can use for social. We got affordability indexes, home sale indexes. One of my favorites to look at when they publish the new reports as they come out quarterly, is this median home price and mortgage payments by county. So you can actually look up Fayette County, Clark County, and find median home price, median mortgage payment on that. It's a pretty long report, but all that data is in there. So there's just a lot of good data. Again, if we're going to be educators for our clients, um, this is another good resource that you guys can use. I got some presentations in here for different things that you can look up. Again, I would always be reading what Lawrence Yun is putting out. This guy's probably one of the smartest economists in real estate, not just for realtors, but period in our industry. So anytime Dr. Yun puts anything out, I'm always paying attention to what that guy says because he always has super great input. So, there is your monthly dose of nerd and econ geek. So threw a lot at you there. So, trying to keep these right at that 30 minutes or so each month. So just open it up for the few of you guys that were able to jump on this morning for any questions that you have about any of this stuff as we move forward. I see you talking, but you're muted. We got the whole dang Kentucky home team here this morning, by the way. Look at that. Aren't they a good looking bunch? Should be bottom left hand corner, little audio microphone that you click and turn yourself on. Let me see. Let me make sure I don't have maybe let me in my non
You were not allowing me to participate. You muted
I'm
me.
the culprit. Yeah, I muted everybody. So yeah.
No, the crew's
What's
here. I mean,
up?
vacation right now, but the crew's here. I thought it was good info. I mean, I think we forget sometimes we get so like caught up in the day to day. Like we have all these resources and people are craving that information. We just have to put it in bite-sized pieces they can handle.
Yeah,
Uh,
absolutely.
I forget to honestly, I forget to go back to NAR, and
Yeah.
I mean, we just need to, it's good info.
Yeah. I think one of the, when we think about the three things if you think back to when David Childers was here a couple of years ago, I love David's things of clients care about three things when we're working with them. Number one is can I trust you? Number two is do you care about me? But number three is are you competent? Like, do you know what the heck you're talking about? Do you know what the heck you're doing? And this is a big piece of that is having the market knowledge and knowing what's going on in our industry and in our markets, both nationally and locally, because he who makes the most friends and knows the most stuff wins in the market right now. So any of this stuff that you can pull, like I said, to integrate into consultation, that can integrate into your talk track with social, if you can brand yourself as the expert, you're there. There's going to be a lot of attraction there. So I think you're right.
So we've got Kennedy SCU there. Are you there?
Yeah, yeah. I think we got Kennedy and Stephen Brashear, who's with Sheridan.
Okay, I'd say I don't know
I'm
Stephen.
here.
Hey, girl. Is anybody, I mean, like we're struggling to find homes for buyers and I mean, we're beating the bushes. We're not afraid to approach a for sub owner or FISBO, but it's still tough. I mean, are you all feeling that too?
Oh, absolutely. I mean,
Yeah.
I've got buyers that are starting to come, to start talking, just have those initial conversations. And, I found that buyers will usually move to action once they have a property in mind, like action once we can get them over to Brad or,
We can
have them in that
help them.
process.
I mean, we're telling our buyers they need to go ahead and get pre-approved. You
Yeah.
Oh,
like,
always.
A1.
yeah,
Always. Yeah. Be
Definitely.
in position because I do think we're going to see an influx of inventory.
Yeah.
So we just need to be ready.
Yeah, and
my
I
concern
think that I
is
think
I don't
that I'll,
think it's
I'll
going to
jump in
fix
there
the
real quick. I
problem.
think that's where this data kind of comes in is like if you can make those 15, 20, the interesting stuff, and when you talk about how it relates to social, like the most popular videos on like YouTube right now are like in the 3 to 5 minute range. So like that kind of short form video, when you look at that overall, consumers are actually in a mode right now where they're consuming, they're not watching 45-minute videos, but they are watching 3 to 5 minute videos that have a little bit more information. And I think if you can take this data and attach it to a call to action of, hey, we're on the verge of something big happening. If you've been thinking about selling your home, but maybe you've been on the sidelines because you're scared of where prices are at or where interest rates are at, now's a really good time to start that conversation. To maybe not necessarily get in motion now, but to be ready to get into motion, as these things continue to happen.
Absolutely.
Cool, Stephen. Anything you would add there, young fella?
I do have a question. I was getting ready to pop off with a question. So it's obviously the rates are a little bit down from what they were, say, 30 days ago. How does it maybe alter your outlook for the next 6 months to the rest of the year? Has that changed kind of from what you thought at the beginning of the year? Or is it kind of stayed consistent with what you thought it was going to be?
No, I kind of think it's staying consistent with where we thought it would be, in that I think that's going to be a slow trickle. Like I think the trend is going to be down overall, with the rates landing somewhere in that 6.25, 6.5 by the time we get to Q4. So I'm not overly optimistic that this is going to be like a huge move in rates, but we've demonstrated that 6.5, 6.5 or lower moves the market right now, in that market. And so is it possible we could see a 5 handle by the end of the year? I think it's possible, but there'd have to be some dramatic economic weakness for that to actually happen. So no, I'm still thinking that because so much of what's going on right now, man, is influenced by politics. And when I say that, I don't mean that to be
I
political.
want to talk about that.
Yeah, so that's okay. Well, hang on. And what I mean by that is that not necessarily politics, it's just what's going to happen with tariffs. Because what gets portrayed in the media, depending on which version of media you listen to, is entirely different things. And the thing you always have to understand about markets is they're always trying to be ahead of what's actually going to happen. And the problem right now is nobody knows what's actually going to happen. And so, I think the volatility, I think we're going to see a lot more like, okay, rates over a 30-day period go down a quarter, and then over the next couple of weeks they go back up an eighth. And then rates go down another eighth over 30 days, and then maybe they pop up a quarter. So I think it's going to be very jerky just in terms of how rates go down. And I think that's why that's important that we always emphasize. And my grandmother used to have this crazy saying. She'd say a bird in the hand is better than two in the bush. And so you kind of want to, lock while you got it, because you just never know what's going to happen in today's marketplace. So long answer to your short question, Stephen, is no. I at this point I don't know that my personal forecast is really any different than it's been, going into the year. I think it is. I think it's a gradual progression of rates moving lower, a lot of volatility in that. Um, but I mean, there are certainly, um, things in place. We certainly have a environment right now where people recognize that housing is very, very important to our economy overall. And so there certainly could be things that happen, again, politically, for either through Congress or the executive branch or whatever, that could be something that gives housing some juice this year. Good question.
Is anybody,
Go ahead.
I'm sorry, is anybody hearing hesitation from people related to the political climate? I do not want to talk politics. I want to talk real estate.
No, actually, no.
Okay. Me
I,
either.
I am not. Yeah, and that's just uneducation, in my opinion. I mean, that's what they're listening to.
Yeah, that's kind of the follow up that I had. Politics are what they are, but sometimes there's a lot of facts that goes along with it. Kind of what politically is there sort of to look for that's going to really affect
well, I mean, again, you only know what's being said and not what actually is going to happen because I mean, it's kind of like, it's everything is kind of always a negotiation now. So I will say I do think the new administration is committed to doing all they can to get rates lower because they do understand that, that's a big component of housing. And so whether that's, getting back into bond buying again or things like that. I don't know what that looks like. I saw something. I've got some friends of mine that are involved with MBA to where there's actually some grumblings in some spaces to maybe bring back some type of first time homebuyer credit. I don't personally think that type of thing will happen, but it certainly could. But with that being said, I mean overall I think politically, I think everything, that's the interesting thing is that I think overall, if we just explain it to people, because if you just take the politics and put it into economics, the reality is the political stance is housing positive because it's all bring down inflation. It's all, it's all around level the playing field in terms of trade deficits and things like that. It's all around bringing down the national deficit. The national deficit is a big reason why we have inflation. And so, when you actually look at the area, you take all the stupidness out of it and just look at economic impact of policy overall. I mean, it's all pretty housing positive.
Love it. Thanks, Brad.
Awesome. You're welcome, sir. All right, guys. Anything else?
I just think at the end of the day, people's lifestyles, when they're busting out of their houses because their family's growing or, their children have left and, they're sitting in a big giant empty house, like those things are going to be motivating factors,
I
that
agree.
outweigh the
Yeah.
political climate.
Yeah, and we definitely are having a lot of conversations with people right now that are just like almost to the point of they're just tired of waiting. They're just like,
I'm
okay,
calling it waiting fatigue.
this is what it is. They've accepted the fact that this is what it is. That the
Yes.
days of 2 and 3 and 4% interest rates don't exist anymore. There's not going to be a housing crash and the value of houses drop 10%. They're accepting the fact that hey, this is the real estate market that we're living in. So we need to do something because, and again, I think that's our responsibility as professionals to be educating the fact that hey, here in let's just look at Lexington, right? Like Bluegrass Realtors is projecting a 5 to 7% increase in home values year over year. Well, if interest rates were to drop 50 basis points, meaning rates go down 0.5%, that literally means it's a complete and total wash if you wait a year. And so we got to make sure that we're having those kind of talk tracks with clients to make them understand that lower rates ahead may not necessarily mean cheapest because it's going to be offset by future home appreciation, which I'm doing. And the interesting thing is I'm doing this for a group of Florida real estate agents here when I get done with you guys, and it's a totally different talk track down there. So again, real estate's very, very local, and we got to be communicating that to our people.
Do you have like a blurb or a snapshot that talks about the cost of waiting that kind of really like I don't want to say
but I could put something together on that. I don't know that I've
really
got one
simple
like
that shows
canned, but I
this
think I think we could put a graphic around that.
I've seen stuff, but it's not concise. I don't think it's like
Yeah.
good. I don't think it's easy public consumption.
Yeah. Yeah, let me see what I can come up with on that. We've got Kelsey here who's a guru at Canva and graphic and all that stuff, and she can take my geek numbers and turn those into really cool graphics that we can all share. So I'll work on something like that and see what I can come up with. Good suggestion. All right, y'all. As always, anything we can do to help, we're here for you. Appreciate you guys. Hopefully this is valuable. Like I said, this is going to be, my plan is for this to be an every month thing, just a quick 30 minutes. Hey, here's what's going on. Here's what we see from again, kind of the getting into the weeds, kind of the nerd side of stuff. And then, obviously if there's anything I can do to help you guys expand to that and implement that into your real estate practice, definitely let me know. Okay.
Thank you.
Thanks for
Awesome,
doing this.
y'all. All
Good
right.
man. Thanks, Brad.
Thanks.
Bye, guys.
See you guys. Take care.